Hey everybody, welcome to the show. Welcome in. We welcome you in from all over the world. We see people out there. Thanks for joining us on Thursday. It's Thursday, right, Paul? Paul and I and Mo and Don are shooting the Tesla giveaway tomorrow. A very exciting day for us. We welcome you guys in. We see all the patrons there. Paul, I was alerted, and Mo, I was alerted that I say too much. So now you're not gonna be able to watch this show without me saying it every 10 seconds. So I'm working on it, folks. Thanks for joining us. Big news, Paul.
Wow, the market's down a lot today.
Yeah, it's moving down.
Holy cow, I didn't even realize that.
Lots of big news. Some of our videos have popped of late. We definitely had some thoughts of a little bit of I told you so.
Yeah, it was kind of bad by me. I went back to our CCIV video, and I just started responding to all the trolls out there as a troll myself.
And we haven't even really brought up, Trader Mo has done some videos on Workhorse, but we have not brought up the idea that Workhorse did what we said it was gonna do.
The story's not over yet. I mean, it can go back up, it can go back down. There's a lot of things that have to happen. I don't like to respond to short-term things, but the thing I said about CCIV, that was I told you so, was you got everybody, not you guys, people out there who love CCIV, put all their eggs into one event happening. That's way too much to do. It's a bad idea, and then the event didn't end up happening, so you're screwed. Yeah,
Workhorse, I didn't see it, Paul. I was working out, getting my one workout in a week, and Mo texted, look at Workhorse, and my jaw hit the floor, down 50%, and all the hate that we got for that video, just like our CCIV video. We told you when you invest in these companies, we told you that when you invest in companies that literally don't make damn near anything and give them a crazy evaluation, it can burn you. And boy, oh boy, some other YouTubers out there got frosted, Paul, but not you, of course.
No, the thing that'll happen for us guys is we have 20,400 followers, which again, we hit that on Tuesday. Well, we hit that Tuesday after the live stream. Yeah. We hit 20,000.
Congratulations to all you out there.
Years from now, when the market has seen its cyclical bear market come into fruition, that's when I'll sit there and say, okay, guys, what did we learn from it? It's my way of saying I told you so. And I'm not saying it to people who are watching, because the people who are watching, who subscribe and belong to our Patreon, probably believe in what we're saying. And by the way, people, sign up for the Patreon. It's $13 a month. It was $8, it was $12, now it's $13. You get the software for free. You're crazy not to. It'll be $50 or $100 in the next couple of years a month. Just sign up for it.
He's heated today, folks. He's very heated. I can feel it coming off his undercarriage. And speaking of that, we have Trader Mo, who's heated, fresh off his GME stock buy today. Mo, what did you do this morning? Tell everyone watching.
So I told everybody last night that I was going to buy GameStop. It touched 200 last night. I said if it gets to around $100 by 9:30 in the morning Eastern time, I will go ahead and buy it. So I was doing my live stream show. Trading was halted. They started up trading, and I think 1 minute into the market, they halted trading again.
1 minute?
1 minute. Then I go in there. I'm like, all right, I'm going to go buy it. So I execute the trade on our live stream this morning. I bought 10,000 bucks. Then they halted trading again. Don comes in my office. We talk for like 10 minutes. They open it back up. Then it wasn't moving like crazy like it is right now, but I went ahead and sold it at a 10% profit, and there you go. I bought GameStop, so now I've forever been a part of this chaos.
Yeah, yes, Paul. Marcus brings up, are you buying lunch?
Yeah, the market ends up down more than 1%. The S&P 500. I buy lunch tomorrow for all the employees upstairs.
How nice. Well, anyway, folks, we'll get after it here. By
the way, can I make a comment?
Please do.
Look at NASDAQ. The NASDAQ is the most overpriced of the indexes right now, right? The indices. Look at how much it's down since in the last month. It hit a peak of 14,095, and now it's at 13,127. So 13,127 divided by 14,095, that's a drop of 6.87%. Guys, if that's not an indicator, I've always said, when markets go down, the most overpriced companies fall the most. If the S&P goes down 30 or 40%, I think it's going to happen more than that. The NASDAQ will be down probably way more than that, because the NASDAQ 100 is one of the most overpriced indexes right now. It's incredible. It's got the Teslas, it's got the Amazons, it's got all these other big companies that are just absolutely overpriced. So just look at that when it happens now. When you see, we've had a couple of days recently where the S&P and Dow were up and the NASDAQ was down over 1%. It's because let's see where Tesla's at right now.
Someone just asked about Tesla. I mentioned we're doing our Tesla giveaway, the promo video tomorrow. We're going to have some hilarious antics and fun, getting a couple Teslas together and doing a promo. But yeah, it's down, Paul. I sold the last remaining shares I had just a few weeks ago, luckily, and my son was pushing to sell his shares. He had 3 shares. Of course, made a killing, but he's very happy that Tesla's now tanking after he sold.
Oh, look at Best Buy. They're down 10%. So Tesla's now down 7%. $52 a share right now. It's down. It's $51.50. I mean, and what was their peak?
800 something?
No, $900.40.
Folks, welcome in today again. All our patrons, everyone watching around the world.
Do you realize that? That's down 23% since its peak.
Yeah.
Guys, as I say to people, you might sit there and say, no, Tesla's going to be fine, but companies that are fine don't have those kind of swings, guys. They don't have those kind of swings. If the 52-week high is $900, the The 52-week low is $70. Guys, this does not happen in normal, stable companies. There's no way that in the last year, the value of Tesla has gone up 13 times, or whatever the number is, 12 and a half times because of fundamentals. That doesn't happen. The fundamentals haven't gotten 12 and a half times better. I look at this thing saying, this to me is obvious, and my goal is to all of us to learn together so we can sit there and understand, think about your life. What would it take for your net worth to go up 12 and a half times? It would take you winning the lottery. It would take me winning the lottery for my net worth to go up 12 and a half times, right? So when you think about this, there's no information that could possibly happen that makes it go up 12 times in 1 year, apart from if it was beaten down because there was some major lawsuit that all of a sudden everybody realized they were right on, and the lawsuit gets thrown out of court, and the lawsuit was going to bury them in a bankruptcy. That's the only way I see that happening. Apart from that, what are we giggling about, kids?
When you keep going and talk, Mo's talking in the chats. For some reason, he's wearing a hooded sweatshirt and a winter coat in the studio, which is casually at 80 degrees.
Normally so cold in here, and today it's 4 billion degrees in here, and I'm sweating, and I'm actually wearing the same shirt as Paul underneath. But if I take it off, I'm gonna have sweat stains going down to my waist, so I can't do that. Here we are.
Paul is wearing a straight dad bod outfit with the short shorts and the short sleeve shirt. It's just astounding. You look really great, Paul. Look at the beautiful chest muscles. All right, shall we get into it? It's been long enough, Paul. We're going to talk today, folks. We're going to talk about Johnson & Johnson. We're going to look at Quest Diagnostics, LabCorp, Thermo Fisher Scientific, and a lot of people are asking about Geo Group. This is this Florida... Don, what is this group again, Geo Group?
They're a private
prison,
basically.
And their stock is way down. We're going to talk about some of these today. Johnson & Johnson had some big news. Johnson & Johnson's been a pretty
Jeff Johnson.
A stable company for a long time, Paul. Isn't one of these...
Did somebody tell me who Jeff Johnson is? Please write it in the chat if you know who Jeff Johnson is.
So let's get into it, Paul. Let's go to the beautiful Everything Money website that our patrons are going to be receiving here in April.
Hunting MILFs in Walmart.
And look.
Wait, Paula's in?
Yeah.
There she is.
Wait a minute. What'd you just say?
Paula's here.
Wait a minute, folks. Wait a minute. Wait a minute.
Paula's in the building.
Look at that. Paul, wait a minute. We got to shut the show down.
I'm only smiling because I saw Mo write Paula's name, and I'm like, why is he writing Paula's name? And I'm like, oh, it must be because she's in the chat.
This woman is so stunning, Paul. She was the topic of conversation, Mo, at our dinner table yesterday.
At the dinner table?
At yours?
Because Gio brought up, did Paul's girlfriend walk through one of the Mexico videos?
Oh, shut up, Mason.
And sure enough, this stunning woman is joining us today, Paul. You must be frazzled, and you must be frazzled now. Yeah, you must be frazzled.
I'm not frazzled at all. I'm glad she's on, but I'm laughing because of how I was just like, what the heck is going on? Now, of course, Mason goes, look at that smile, Paul. Oh, shut up, Mason. You know, it's funny. We were in Mexico last week, and Mason was on a free trip because he's helping us out with Everything Money merch. It was the most well-behaved I've ever seen this person in my entire life.
Of course.
Mason was so well-behaved. I told him to do something. He went and did it. Paula was like, Paul, you're treating him poorly. I'm like, trust me, he'll make up for it when he comes back. And sure enough, the second we get off that plane, he is treating me like crap again. This little cocky little 23-year-old thinks he owns the world.
Yes.
And he's being cocky. I'm like, this is why. Like, literally, it was so funny. I'd be like, Mason, get me a Coke. Goes up, gets me a Coke, and I'm like, where's the glass for it? He gets back up and Paul's like, you're being so mean to him. I'm like, no, I'm not. Trust me.
Well, folks. I mean, hopefully we'll get her on a live stream in the future because
Did you see this comment?
Paul.
Yeah,
she's smart and she's just
one?
intelligent and she's just witty and she has a sense of humor and she's just the best. And I love this. So
that's a funny comment by Noah.
That's a great comment.
Giddy's a schoolgirl. That's you, Paul.
I'm not Giddy.
So we welcome in everyone. Paul, let's get after it. I know that the chit chat, we need to get after it because this is a real investment show. And we'll look after it. I was mentioning Johnson & Johnson, Paul, because is this one that Warren Buffett's always been in love with, a very stable company? Am I wrong?
I don't remember him talking about Johnson & Johnson,
but stupid.
He could be. I don't know. Do you know, Mo?
I'm not sure, no.
Yeah, I'm not exactly sure on that one, but it seems like a company he would be interested in.
Head over to the Everything Money software and let's take a look at Johnson & Johnson. What is the market cap and dividend for this company?
Guys, this is a huge company.
Come on.
$428 billion company, $83 billion revenue. So PE, I'll have to dribble as an X. It's a 29 PE, but they have a great profit margin of 17.8%, so check mark there. Look at this gross margin. This is software kind of margins right here, folks. So we have one X and one check. Now, because of the software being so awesome that if you don't sign up for $13 a month, you are stupid. It's going to show you everything here. Their free cash flow last year was $18.3 billion. They have a 2.5% dividend that paid out $10.5 billion, which means it'll show you right here. Do they have enough money to pay their dividend? Yes, they do in the last year. So these are just high-level things. It tells you 50-week high, 52-week low. By the way, for people who say that numbers can't fluctuate a lot, look at these highs and lows. Either way, one X, one check to start.
Pillar number 3 is revenue growth over the past 5 years.
Revenue growth the last 5 years. 71.89, 82.58, check mark. I'm willing to bet there was an acquisition somewhere in this area.
Pillar number 4 is profit growth, Paul. Now that we're all settled in and doing our thing, profit growth is pillar number 4.
16.5 down to 14.7, X there.
X for profit.
Yeah, profit's down from 16.5 to 14.7.
Shares outstanding, which is pillar number 5.
These numbers of shares are wrong, but the growth and the decrease is accurate. It is a check mark there. They did decrease by about 5%.
We are beta testing the Everything Money software, and our patrons will be beta testing it more in the Discord, and it will be released on April 15th. April should be a big month for us, Paul. Lots of, the Tesla giveaway is coming about here. We hit 20,000 subscribers, and we're giving a Tesla away at 50. So stay tuned, guys. Pillar number 6, Paul, for Johnson & Johnson is current assets over current liabilities, baby.
Absolutely. So current assets are $57.5 billion. And current liabilities are 38.85. So
wow.
plenty of cash on hand to pay off their debts, which I was actually surprised about. I thought it'd be a little bit closer.
So we only have 2 checks for Johnson & Johnson. PE is a little high, and their profit is not growing. Pillar number 7 is free cash flow.
How do we only have, no, we have profit margin, revenue growth, shares outstanding, assets and liabilities.
I'm sorry, I was talking checks. PE is bad, profit is bad. That's it.
You're talking about X's.
X's, sorry, thank you, Paul. Thank you.
So checks are the ones that are in green that look
You're
like
right.
a check.
Well, they're all in red on my page.
And X's are the one.
Whoops. Pillar number 7, damn it, Paul. It's free cash flow. Let's go.
So guys, one of the great things I did on this software that you can get for $13 a month if you're smart is cash from operations less capital expenditures. I added my own line here in the investing section of the cash flow statement. This is not a real line in the cash flow statement. I added it so that you guys have easy access. 13.7, 18.3, check mark there. Remember, we need this money.
Go ahead, Paul. Keep going.
We need this money to pay dividends, buy back shares, make big acquisitions, etc. This is good growth. And if you see over the last few years, it's up a lot. They did 12 billion 10 years ago. Now they're doing 18 billion. It's pretty consistent growth here. I like it a lot. Now, what's the average, Seth?
Give me the numbers one more time, Paul, for the last 5 years.
13.7.
13 billion? Wow.
Yeah, 13.7.
Go ahead.
18.5.
Thanks.
18.5.
Wow.
19.7. 18.3.
Am I going to mess this up? Maybe not. Divided by 5, 17 and 3 quarters, 17.75. This is their free cash flow average over the past 5 years is $17.75 billion, Paul.
Now, we talk about 20 being the free cash flow multiple because you're doing an average, and when there's an average and the numbers are increasing, you want to multiply by a higher metric because then you're not giving enough credit to recent years. That would make the company worth $350 billion, okay? So it's not worth, it's $490 billion right now, or 408, what's the number?
430 billion.
430, so it's not far off, guys. It's 25% off. It's not terrible. So I'm looking at saying, be cautious on this one. Be ready. Like, I like the financial of this company. I like their Johnson & Johnson is not going out of business anytime soon. I mean,
well, the whole point of this, Paul, I'd like to get your thoughts. Maybe Trader Mo has some more thoughts. Is their vaccine? The news is, Don, right, that the vaccine looks like it's doing quite well, or at least it's a one take.
It is a 1-dose vaccine. It actually just got approved by the FDA yesterday, and its effective rate is the only thing that was glaring to me. But Mo kind of touched on this yesterday in our meeting. Their effective rate is 66%, whereas Moderna and Pfizer have a 95 and 94.1% effective rate. So, but it is 1 dose, so it is actually able to combat the new strain that came out of South Africa. So there is some positivity there.
Yeah, and Paul's next girlfriend may come from South Africa or some
that
other.
was mean. Is Paul still on the on the chat?
It's just a joke.
Yeah, you're gonna yell.
Paul, I love you.
Not you.
Don't say it to me. Say it to Paul.
I did. They're the same name. Go ahead, Mo.
With that vaccine efficacy, if it's 66% and it's a one-time shot, and you don't have to get this shot. I mean, they're talking about Pfizer and Moderna vaccines that you're going to have to get. This thing is not going to last for more than 18 to 24 months. So if that's the case, and I can get one shot and it works 66% of the time, but it's one and done forever, I'd rather take that one. So Johnson & Johnson is one of the best drug companies in the entire world, and they have been for a very long time. They are an American staple for portfolios for any fund. So yeah, I don't know. I like Johnson & Johnson. I would rather take their drug. And it has been proven that their drug and AstraZeneca's drug out of the UK is far safer than Pfizer and Moderna.
Yeah, so I mean, with that news, Paul, aren't things looking up?
So, I don't know how the numbers will pan out. Part of what we do here is when you're looking at the 8 pillars, your goal isn't to make a decision from the 8 pillars. Your goal is to tell a story and say, okay, there's other news. What's the other news? That there's a vaccine coming out. How much can it add to the profitability of the company? I personally am not going to add a lot of value for the vaccine. And the reason being is this is a pandemic that we're having that is hopefully going to be isolated. Now, could I be wrong on that one? Absolutely. But every other one we've had in the past has been isolated. So I'm not going to give them a future value based on a 1 or 2 year time span where they can make a few $1 billion. I want to look at the fundamentals of the business and say, what is the business making fundamentally that's going to allow me to make a good investment here? We're not far off, folks. It's only a 20% decline. And if you look at the PE, of 29, I'm only asking for a 20% reduction in the stock price. It would still make this company a 24 PE, even with a 20 or 23 PE, even with a 20% reduction in the stock price. But I think we're very close to having a good value in this company that I think would be worth 20 times free cash flow. Now, by the way, I'm not buying it at 20 times free cash flow, but I think it's worth the 5-year average 20 times free cash flow.
Yeah, and another thing to look at, when you're thinking of Johnson & Johnson, how much does this company really fluctuate on news? That's the other big thing. Johnson & Johnson is one of those companies. Just recently, they had an issue with their baby powder that was causing cancer, this and that. It really didn't move that stock very much to the downside. That kind of news would have affected another company very much, in a far different way. So it's harder for stocks to go up than fall down. So there's that. Seth, you want me to do momentum?
Sure, go ahead, Paul.
Okay.
Mo, sorry.
That's Mo. I'm Paul.
Mm-hmm. So he's having a rough time over there. So it's a downtrend right now. There's no doubt. It's coming right through the sweet spot. And we are definitely going to hold some sort of resistance right here at this call it 155 area. So what we need are some red engulfing candlesticks to come down like this to be able to break that 155, 158 resistance, wherever it is. And then you can add to your position. But again, Johnson & Johnson is a very hard stock to trade just because it doesn't fluctuate very much. So if I am trading, there are better options out there. This is more of something that I would put in a portfolio for a long period of time. Maybe this is your retirement account portfolio and go from there when the time is right.
Thank you, Trader Paul. Kobe is saying that I'm tired. I did wake up too early, Paul, and I couldn't get back to bed.
What time did you wake up?
Like 5:15 something.
Come on.
And I'm dragging.
Because all you're thinking about is everything money.
Well, that is true. I mean, we got a big shoot tomorrow.
Oh, we do the big shoot. Tomorrow's the big Tesla shoot.
That is true. So, all right, folks, that was our take on Johnson & Johnson. It's currently a void, but we're close, right, Paul?
It's not a void. It's just add it to your watch list. Set a price target in there of, 130, and pay attention to it at that point. I just think this is a great company that's going to generate a lot of cash flow over the future, but you just have to pay the right price. Every company can be bought and sold for the right and wrong price. You just have to determine what that price is for you.
Do you want to look at Procter & Gamble right now in comparison?
Let's look at PG.
This is off the request line from Kiko. It's saying Johnson & Johnson versus PG. I don't know if you're talking about Paul, but we're going to look at Procter & Gamble.
And remember, guys, the 8 Pillars website has the 8 Pillars right there for you. You don't have to do the work, but either way.
Go ahead, Paul.
So much lower market cap, $316 billion. Net income of 13.8, PE of 22, so that's an X. Mm-hmm. But again, nice profit margin, just like in on Johnson & Johnson. If you go look over here, their free cash flow in the last 12 months was $16.2 billion. 7.7 of that going to dividends to yield people about 2.5%. So 1X, one check, and they have enough money on hand in the last year to pay their dividends, and it pays a pretty decent 2.5% dividend yield. So far, I'm liking it. Even though the PE is high, I like it.
Pillar number 3 is revenue growth for PG, Procter & Gamble.
All right, 65 billion, 74 billion. Check mark there.
Check mark. How about profit growth, Paul?
The profit growth is actually an X, 15.29 down to 13.85. X right there.
This was the same for Johnson & Johnson. Their profit's down. Shares outstanding is pillar number 5. We want this number going down.
It is a check mark. It is going down. I'm not going to get into the numbers because the numbers are inaccurate, but it is a check mark. It is going down. Balance sheet. Total current assets about 25 billion. Current liabilities of 32. So Johnson & Johnson had a better balance sheet than Procter Gamble right now, right? Mm-hmm. We had about $20 billion more in cash on hand than current liabilities with Johnson & Johnson. With Procter Gamble, we're in a deficit right now of about $6 or $7 billion, $5 billion, something like that.
Oh, so they're under. This is an X, sorry.
Yeah, this is an X. This is an X.
Okay.
Free cash flow.
Pillar number 7 is free cash flow growth. We want this growing, of course, Paul.
I mean, look at this, 9.9 to 16.2. That's a check mark there.
Nice. Wow, really?
Yeah. What's the average, Sethi?
What are the numbers again? I'm sorry.
9.9, 10.2, 11.5, 13, 16.2.
The average free cash flow over the last 5 years is 12.
Times 20 is 240 billion, and it was a
$316 billion company.
316 billion. So it's an X there, and it needs to drop by 25%, roughly. A little under 25%. I prefer to buy Johnson & Johnson. I don't like why are the current assets less than significantly less than the current liabilities? I got to understand that. And why is Johnson & Johnson so much better? I don't know. But I like that a lot more, Johnson & Johnson. If I were to make a decision right now, even though the PE is higher on Johnson & Johnson, I'd be leaning towards Johnson & Johnson right now. It doesn't have to drop as much to get to its price target for me.
What are your thoughts, Dr. Momentum?
Now, from a chart side, I am leaning towards Procter & Gamble, and that just shows you how different they are. So we are running, for those of you that have been around and paying attention for a long time, we are under our 32% line in a downtrend and just coasting along the bottom. So this is a perfect dog stock. This is a company where we can throw a tracker share on here, wait until we turn up over our 32%, and hopefully buy this thing. And this, I mean, we are going to $146 a share, so there's possible $20 in gains right here. If you just buy this thing as a tracker share, one share, sit there and wait and let this thing develop over time.
So I hate to say this, but there's somebody up there with a Middle Eastern name.
I saw that comment as well.
Can you put the comment on the screen? Because I want to talk about this.
Yeah, Don, it was a few back. It said, why are you got it, Don? He said, why are you so, is this the one you're talking about, Paul? Why are you so happy when the markets are down?
Yeah, where is it?
Everything is down. I don't know why you guys are, why you guys.
Yeah, everything's.
So let me explain this. Let me explain why.
Look at the abs in that picture,
When
by the way.
you buy your favorite thing in the world, do you want to pay more for it or less for it?
This is hard for people to understand, Paul. We've been saying it. You've been saying this for years. And
how does the stock market affect the performance of a company? Remember, stock price and company are very different. A company is going to make what it's going to make over the next years, right? Mm-hmm. It's going to make it. Whether the stock is up or down, it's going to do what it's going to do. All the stock price says is what's the perception of what this stream of income is worth. So the less I pay for something, this is $15 in profit.
I don't think you've broken it down quite this eloquently, Paul. Like the way you just said that is right. Like the stock, even it's blowing my mind right now.
Yeah,
is the
everybody
stock
thinks
price.
like, oh, stock price. No, the company's going to operate. Mm-hmm. Just like we are a private company. We don't have a stock price. We operate no matter what people perceive our value to be. So the company's going to make what it's going to make. So let's say in the next 5 years, it's going to make $15. Would you rather buy the shares for 3 or 10? 3. If the price goes to 3, you're buying some. What if it goes down to 2 after that? If you believe the company is still going to do this, you buy more shares. Now, what ends up happening is emotionally, you see the price going to 2 and you go, how is it possible for me to buy a company that's worth for $2 that's going to make me 15 in the next 5 years? That's the hard part about investing. The numbers aren't the hard part. These numbers, the reason I'm giving it to you guys, if you join Patreon for $13 a month because you're all smart, the reason I'm giving it to you is because the numbers part is the easy part. The hard part is the discipline of saying, why is the market telling me before it was $10, then it's 3, and now it's 2? That is the hard part of investing, to see the price. And I have the same issue, guys. I have the exact same issue. I struggle with the same thing you do. Maybe not to the extent that most people do, but what we're trying to learn here as a group, because I'm still learning it, is to separate the stock price and the business. If this company was a private company, if Johnson & Johnson was a private company that I could buy that generated me $18 billion a year in free cash flow, it's a very simple calculation. If I want to make 10% a year, I'm willing to pay $180 billion for it. That's it. These are the things, the math is the easy part. The question is when the market tells you your numbers are wrong. But it's not necessarily that you're wrong. It's just the public's perception of that. That's the hardest part about investing.
You're blowing my mind right now, Paul. Really, I mean, I've been sitting here for 2.5 years listening to you say this, and you're absolutely right. I think back to what has happened this week with the CCIV merger, with Workhorse not getting the contract, like Nikola not getting the contract, and a lot of other YouTubers just 10xing, 20xing, just guaranteeing these are going to the moon. And when it doesn't happen, you're right, the perception changed, but the company never did. Lucid still makes no automobiles. Workhorse still can hardly make five trucks in a day.
I know.
But just the perception has just drastically shifted. And you've been saying this for so long, and I couldn't quite understand it. But you must be frothing at the mouth a bit, whether you're rabid or not, about the idea that you've been saying when the market is down, our channel will explode.
I've not been saying that.
Go on.
Mo's been saying that.
Yeah, I've been saying
Mo
that.
keeps pressing that when the market goes down, we will. I do believe he's right now. And it's fine. We're still going to get losers because there's still going to be people out there, even when the markets are crazy. I mean, look at our Patreon group. We have amazing patrons in there who talk about opportunities when stocks are down. I'm just sitting there saying, guys, our average viewer is in their 30s. You have 30 more years until retirement. You should want stocks to be down as long as possible until you retire. The hard part will be sitting there and going, oh my God, stocks are still down and I'm losing money, but yet the companies I bought, their profits up. You're going to see a disconnect between price of the stock and company performance. That's always the case. There's always a disconnect. The question is your disconnect that you're buying the shares or selling the shares? That's the difference. That's the absolute difference. It's really, really difficult. It's that whole Mr. Market analogy with Warren Buffett and Ben Graham. Is the Mr. Market's going to be in a good mood one day and pay you more than the shares are worth, and some days it's going to be a bad mood and pay you less than the shares are worth. You have to separate the company from the stock price. In fact, a very good exercise to use is don't even look at the stock price. Forget about the stock in the chart. Don't even worry about it. Evaluate every company based on if I was going to buy this company, what would I pay for it? Based on the things you're learning on this channel. It's something that I should do and I don't do enough. But I don't look at the stock price like ever. But it's hard. It's hard for me, guys. I have a hard time looking and going, man, this stock is down a lot. What am I missing? The good news is, when that happens, you can use it as an opportunity to go learn more about the company and see if you're right. See if your assumptions are correct or not. That's it.
You know, I bring this up, Paul, because I was saying we recorded some videos today, and you and I never really sat down and talked about the what happened with Workhorse, which has been a major talking point with a lot of channels out there. We did some videos and got blasted, but it really came to fruition, Paul, because I sat here and watched you talk about Workhorse, and other channels were predicting incredible when Workhorse was going to get that United States Postal Service contract. This stock was going to the moon, $100,
Yep.
$300. And then just like you said, it might not happen. And when it didn't, it just comes all crashing down. And I'm thinking, where are the videos from these YouTubers that were basically saying, I clickbaited you. I'm not actually worried about your money. I just need clicks on my channel so I can feed my family and pay my bills. And I'm sorry that I maybe tried to deceive you into thinking that Workhorse was a good company when all along there's nothing to it. Am I wrong, Mo?
There's nothing in the company. There's nothing, and that's the thing, guys. I look at it saying, if your friend had a business they started with 5 employees that made no revenue and lost lots of money and said, hey, come invest with me. It's amazing. We're raising money for Dynasty Owner right now. The number of questions we've had asked of us about Dynasty Owner has so much potential. We have a hard time raising it at a very reasonable valuation. Why? Because it's amazing to me that when people have a private enterprise, they are way more scrutinous on the financials than when it's a publicly traded business. There was a moron in Manzanillo, Mexico, who owns a house next door to mine. He's the biggest Tesla fanboy I ever met. Tesla's going to the moon. But I once offered him an opportunity to buy a house with me because he wanted the same house. And I was being a nice guy. He goes, well, let me see what the financials look like. I'm like, oh, suddenly financials matter to you? And I immediately said to him, don't worry about it. Don't worry. Now we're killing it, and I'm really happy he's not going to make the money with us. But I look at that saying, oh, all of a sudden financials matter. That was my big, oh my gosh, people only care about stock price. They don't actually care about value.
Yeah, I Paul, I do have an obsession with some YouTubers out there, and I brought this up with Lucid, with CCIV, and when you watch their series of videos, the BS that they're pushing right before Lucid and CCIV merged, they were saying, like I said, upwards, the stock price is going to go to 100. Then 3 hours later, they can justify why it's 30. And then today they put out a video and saying, you know what, it can get back up to that 100. It might take years. And the whole time I'm thinking, why? And why are you what basis are you saying any of this? And now I'm getting upset, Paul. I'm getting red face. Go ahead, Mo.
Seth, we talk, it's as if mergers and acquisitions are a new thing that are coming, that this is the first time it's ever happened. Look, there's deals that fall apart all the time. When they do fall apart, though, they don't decimate a company because there's literally nothing behind it, and we're promising that something's going to happen in 2023. That's what this is about. Is production for these United States postal cars is going to start in 2023. They said that they were going to replace 100% of the fleet, which was 665,000 mail trucks.
That's right.
Oh no, it's only going to be 10% now. So before these YouTube people, why don't you just read a Yahoo Finance story, and that's all you got to do.
And the comments below, too. This is not that difficult. Listen, Phoenix just said, can we move on? No, Phoenix, we can't. Here's why. I know you're one of the more disciplined people we know in our chat.
I love you, Phoenix.
Phoenix is great, but the thing is, I had to brainwash myself into this belief years ago. It happened over time. We're just trying to re-accentuate every single one of these points because this will be very important for people to understand long term.
Because, Paul, you're absolutely right. I'm telling you, folks, I'm still learning just like you. I watched a video that morning, Paul. CCIV and Lucid were merging. That stock, how do you argue with it? That stock was going to the moon. Every video on YouTube is about that. I'm like,
and my argument
I literally almost said,
what if it doesn't?
You know what? I literally almost said, I better not listen to Paul. He's got to be wrong on this one. They're going to get the contract. I'm going to put some money into this. I'm not even going to tell Uncle Paul. I'm going to put some money into this. Like, you know what? I got burned before, Mo. I got burned before. Yeah. I got to listen to Uncle Paul. And what the hell happened?
And I think you texted me and you said this Meet Kevin guy owns CCIV over $500,000.
Yes.
So
he has a vested interest in.
Well, not anymore. He doesn't. He has a lot less than that. But where is his apology video to all of his stupid followers that are going in there and following this idiot blind?
That's what I was looking for today.
Guys, let's remember that he does think he's right, just like we think we're right. Are we apologizing if I'm not apologizing for Tesla going up? I'm never going to apologize for that. Now, the difference is I've sat there and said it can be completely irrational and go up to the moon, and it did. I didn't think it was going to. There's a big difference there.
That's true, but we're also saying that there is a reason that it shouldn't be going up. This guy was not giving a reason.
That is true.
We are giving a reason.
I understand.
That's the difference.
Yeah, but in the short run, we can look wrong and stupid, which
100%,
we have.
100%.
Right? My entire last 5 years has made me look wrong and stupid, but process is what matters, guys. Yeah. If you want to become a professional basketball player, you have to have the right process for practicing and getting better. It's no different from investing. The wrong process or no process will lead to disastrous results. A good process will have short time frames in which it doesn't work. When I say short, you think 4 or 5 years is a long time? It's not. Mm-hmm. You guys are all going to save for 40, 45 years for retirement. 4 or 5 years of that is 10% of it. Come on, that's nothing. Like I look at 5 years and go, what the heck is that? That's nothing. That's absolutely nothing.
So to sum that up, Mo, I agree with you. I specifically went on YouTube today and I was looking for the video of like, I'm sorry, I was wrong on Lucid, on Workhorse, on all these things. I didn't see those. In fact, Stock Mo is doubling down and buying more Workhorse and more CCIV. Don't know why.
Hey, well, but, neither does he. So
you're right.
You're
neither
good.
does he. And the numbers he's predicting are based on nothing but hills and valleys on a chart.
Yeah.
So if you're fed up like I am,
and this guy doesn't know what a chart is, he just looks at it, squiggly lines going up and down. He's like, oh, it's lower today. Let me go grab it.
So call me jealous because he's got a lot of minions following him. But,
listen, we're gonna get there.
Don't be jealous.
And
we're
at the end
gonna
of the
get
day,
there.
guys, if our channel stops at 100,000, we have really great users. That's great for us because we're really focusing this channel on the software. That's our big thing. Because I'm using all the software that I'm creating is software that Mo and I use and our business upstairs uses. This isn't some, BS software that we're just like, okay. We're genuinely using this software. It's a big commitment of mine. It's going to cost me hundreds of thousands a year to have. And I'm just, that's why I look at this saying, you look at what people do, not what they say. We are putting our money where our mouth is. We're sitting there and doing all this stuff. My money's where my mouth is. If you're a Patreon, you see my portfolio once or twice a month, and you see exactly that I'm doing exactly what I say. Now, with that said, you guys might be a little bit different. You need to save for retirement. You shouldn't worry about the ups and downs fluctuations, and you should buy consistently. But for me, I'm like, listen, it's overpriced. I can choose to take a step back and not be involved.
Okay, I let that all out, Mo. I really just...
I had to get it out too.
Okay, I'm glad we did.
And I think my frustration taking out on this Meet Kevin guy, because I actually think he's okay, it's on this Stock Mo guy. It's all building up, and it was the first name that I had to go after.
Sorry about that, guys. I mean, I just, the reason I bring this up, some people might say who don't care about the hate. Like, people are watching this. Young people who have a lot of money, friends of ours, Paul, who have a lot of money, might see these videos and actually dump a ton of money into CCIV.
Should I do the terrible analogy?
Please do.
If we'd stopped Hitler in 1935,
go on.
When he was, I'm just kidding. It's like that joke. Like, anytime somebody brings Hitler up, it's like, okay, we're done here. Like, it's
crickets.
Yeah. Listen. We're going to keep bashing them. I know you guys don't like that. I don't care, because we look at it going, we want to educate people and call them out and say, no, you're wrong on this one. And I don't think these guys, I think that I like Meet Kevin. Somebody else, Phoenix, said the same thing. He seems like a very nice guy. Is he misguided? Sure, but we all were. I was misguided at one point. 20 years ago, I didn't buy into the hype as much as I did, as much as other people did, but I still bought in the hype, and I lost lots of money doing that. So it's just all part of a learning process, and we're here to learn and teach, and we're going to do a lot of that. I'm learning. Listen, a year and a half ago, you'd have never seen me do momentum stocks.
Mm-hmm.
You'd have never seen me do trading, ever. And now, I like momentum. I like trading. I don't do charts. I try to learn charts. I just didn't stick with me. But these are things that we're going to learn along the way.
Yeah, Benny was saying we absolutely need another Katy Perry quote to really sum up the situation. Paul,
so Mason, the punk that he is, said, Paul, it's an Alexander Hamilton quote. Really, Mason? I thought Katy Perry had some brilliant quote that I just remember from the song, and I got this quote wrong. But yes, those who believe in nothing fall for everything. I know that's not the exact quote, Mason. Sorry about that, Mr. Troll, but it's just, yeah.
I love you. Okay, guys. We thank you all around the world watching. All our patrons, we love you. Mo and I did just have to get that out a little bit, because it's just frustrating to see. I think that's it, Paul. It's frustrating to see people that are just peddling BS, get a bunch of gains, and then when they're wrong, they're not gonna fess up to it, Mo. And
Kathy Wood is very bright. Kathy Wood's an idiot.
Yes, she is.
Why do you guys think that, by the way? This is a huge talking point. All I hear about is ARK ETF, and Kathy Wood. They put her, all these hype guys put her picture on every thumbnail. Who is this gal? Tell the people what's going on.
Look at Spicer's comment. Paul with his 14-year-old girl legs listens to Katy Perry. How very shocking.
That's true.
Katy Perry and Hitler in the same live stream. That's not valid. I don't know what it is. What was the question?
Kathy Woods.
Kathy Wood. Listen, guys.
What is this?
She's a hype investor. When she's trying to she's trying to justify hype with fundamentals, it doesn't work. Yesterday, my friends were teasing me, going, "No, she's obviously smart." I'm like, "No, she's actually not smart. Like, literally, she is not smart." I met Lisanne Saunders years ago at an event. She's the chief strategist at Charles Schwab. Sounds brilliant. I think she's stupid. That's just the way it is, because she doesn't understand valuations. She doesn't understand the stuff. You cannot be. If you ask Kathy Wood right now and Lisanne Saunders, are you a value investor? They would say 100%.
They would say yes.
They would say absolutely. We believe in fundamentals. But look at their actions, not their words. You cannot sit there and say, I believe in fundamentals, and you think this market, could you end up being right, this market goes up? Yes, but it's not because you were right about fundamentals. It's because of something else totally different. You're right because of timing. There's a very big difference. The argument I make is, if you do the same thing 100 times over, you will lose money. In short periods of time, you can look very, very impressive. But the right process wins in the long run.
You know, so later this week or this weekend, a video on Oshkosh, the company that did win out on that United States Postal Service contract for the trucks. Workhorse did not. And surprise, surprise, I want to be a big fan of an Ohio company, Workhorse, and there are 118 employees, but a very large company, Oshkosh, was 118,000 in a partnership with Ford.
Oh, sorry. Penny
Vin
Vin just said something.
Please do.
I don't know if he's right or not. He said Kathy Wood said that Bitcoin will replace bonds in the future. If she really said that, it is proof that she doesn't know what she's talking about. They're two totally different things. If she had said Bitcoin will replace the US dollar, that is a proper analogy. Bonds are not Bitcoin. That to me, if Vinny, can you please show me where she said that? Because if she did say that, I rest my case. I'm gonna drop the mic and go home because that is literally proof. She doesn't even know what bonds are if she's comparing Bitcoin to bonds. She has no idea what they are. To say that is a complete misunderstanding of assets and money. Complete misunderstanding.
You think about the traditional 60-40 stock to bond portfolio, but look what's happening to bonds right now.
Yeah, bonds.
If we are ending a 40-year secular decline in interest rates, that asset class has done its thing. What's next? We think crypto could be the solution. The title of the article is Bitcoin may replace bonds, Cathie Wood says.
Cathie Wood is an idiot.
Yep.
Please share this with your friends who think Cathie Wood's brilliant. Bonds are a way of financing that gives investors a coupon all along the. Where's the coupon on Bitcoin? How is that a piece of, you're talking about? That's like me saying to you, Seth, I'm going to give you it doesn't even make sense. Like, yeah, I don't know how to explain how it doesn't even make sense. One is a tool used to pay people back with a coupon rate. Bitcoin is just $1. It's just a dollar amount. That's all it is. They're totally different structures. They're completely different things used for completely different. Bitcoin's being used as a currency. Bonds are not a currency. It's a tool being used. On one side, it's an asset. On one side, it's a debt. Now you can make the argument that Bitcoin can be used as an asset or a debt. Sure. But you'd use Bitcoin to buy other assets. You can't use a bond itself to. This makes no sense to me.
Cathie Wood is also the person that said that these ARK ETFs are okay. So,
because she's the head of ARK, isn't she the head?
I have no idea.
Yes, she is. Yes,
she's the head of ARK, and everybody thinks she's a genius.
Well,
she doesn't know.
I've said this before on other live streams, but I feel like it needs to be said again. These ARK ETFs are not something that you should have in your retirement portfolios. They're not the same.
I disagree with that.
I don't.
If you want to speculate a little bit on them and put a very small amount in there,
that's totally different, though.
Well, that's putting it in your portfolio.
Well, it is, but when I'm saying like really buying these things over time and building it, like you are with a Vanguard or SPY.
Oh yeah, I think the market-based ones.
Yeah, you have to. You cannot do the ARK ones.
Or go find fundamental ETFs. ETFs that are based on fundamentals that just buy them like systematic systems, just like buying the 50 lowest price to free cash flow companies in the S&P. You will do better in the long run in stocks.
My point is that ETFs shouldn't be booming. That's just not something
of course. Not a well-balanced one. Bogdan, we love you. Paul Gabriel, from what Seth just said, she did not say that. She said that people would not buy bonds. They would buy Bitcoin because bonds interest is so low. Maybe, I mean, I don't
that's so different than saying I'm going to buy real estate because buying interest is so.
Let me keep going. Cathie Wood said, we know there's a concern given all the qualitative easing and the no rules-based monetary policy out there. Fixed income has done 40 years of really hard work, Wood said. If Bitcoin represents a new
By the way, for fixed 40, bonds have done really, really well over the last 40 years.
If Bitcoin represents a new asset class, why not invest in it?
Well, fine. This is a new asset class. Invest in this.
Tables?
Invest in this podium. This is a new asset class. Invest in this. This is a new asset. Just calling something an asset class doesn't mean you should invest in it. That's like no different than we should all have Magic the Gathering in our portfolios. You should have baseball cards in your portfolios. You shouldn't have anything you don't understand in your portfolios.
And again, folks, if you recall, when Bitcoin dropped and fell, no one ever talks about this when it's really low, Paul. All of a sudden, all these articles go away. It's only when it somehow gets hyped up that people are now interested. This and all the other coins you can't even keep straight out there.
Yep.
Right? I mean, so yeah, it's tough. It's tough. New asset class. That's right. Paul is frazzled. This is a frazzling show.
I'm not frazzled.
You're a fraggle.
I'm a Fraggle Rock. No, I'm not frazzled. It's just, I look at it going, so everybody watching right now is an expert in some field. You have a job, you do something very, very well. There are other people in your job where you know that person's not smart. We can all agree that not everybody who does a job is smart. But just like CEOs, some people rise to the top because of marketing, politics, things like that. I don't know how Cathie Wood she probably had a good run of stocks at some point in a short time frame. And that made her amazing. I had somebody reach out to me yesterday on LinkedIn and say, Paul, come invest in my fund. I've gotten 17% returns since the fund's founding. When did your fund start? 52 months ago. So during one of the biggest stretches of the biggest boom in the last 52 months, you're bragging about that. The market's almost doubled since then. That's not even being the market. I said to him, are you using debt? Yes, we use debt. So you have to use debt I think the S&P has done better than 17% for the last 5 years. Maybe it's been about 15. And I look at it going, here's somebody raising money from investors, and they don't realize how crappy they've done relative to the market while using more risk, having more debt. We can all agree that there are good and bad in every single business that happens.
Yeah, Bogdan's clarifying that Kathy Woods, he says that I don't like her, and but she did not say Bitcoin is like bonds. And I would say, Paul, I pulled up that article, and you know the misleading clickbaity titles, Mo.
Yeah.
I didn't see that
She
precisely.
was saying it's going to replace bonds.
Yeah.
Because people are going to go to them instead of Bitcoin, instead of bonds, because people are going to do Bitcoin instead of bonds because of the low yield on bonds. Remember, guys, bonds aren't just used only for getting a certain yield. There are so many other uses for bonds. It's just to sit there and say that it's not comparing apples to apples. That's like sitting there saying you shouldn't own bonds ever, you should only own stocks, because clearly stocks over long periods of time crush bonds. But there's a reason why we have bonds in our portfolios.
And you know what, Paul? OL rules saying it's got to be it's got to be one of our patrons. They always comment. I love you. He said, Paul, you said this the very first comment I had with you many years ago about Bitcoin. Is you said, you know what? I don't understand it. I'm not getting involved. He said, Paul's correct. You should not have something in your portfolio you don't understand. There's plenty of ways to make money out there, and everyone for some reason thinks and probably is making that cheap money on these coins. The greater fool theory is
FOMO. And it's FOMO. It's fear of missing out.
Yeah.
And the funny thing is, I've been very blessed with zero FOMO. Like literally, I mean, if anything, I'm blessed with the exact opposite. If people like it a lot, I hate it. I'm called Contrarian Paul in my group chat. Oh, Paul's a contrarian. It's like, yes. Literally, if everybody likes something, I go, it's probably not really as good as people say. And I see it everywhere in life. Like even when I deal with contractors, they say something that's probably not true. Why? Because every contractor says it. Every single thing we talk about, I question anything that the masses believe. Now, I've been around so many investors, very, very rich investors, who say that and then do exactly the same thing. Mm-hmm. They say, I don't go to the masses, and then they go and do exactly what the masses do. Because there's still a thing called career risk, guys. Career risk is very, very big in the finance world because everybody out there is going to compare their money manager to their neighbors. So their money manager never wants to lose to the market. They can't lose by a big amount. I just read the other day, the best mutual fund performance over 10-year periods, usually those same managers were in the bottom 10% for at least 3 years of that. Can you imagine that? And it's been shown in history that when managers get fired, portfolio managers get fired, they usually do better after they get fired because of the fact that, or they get stolen away, they usually do worse after they're stolen away from good performance elsewhere. Because good performance is over long periods of time, not short run. Mo, are you guys laughing about something I did?
No.
Oh, was I talking too much?
No, you're doing great. Someone said, Kiko's asking, can Paul talk more about risk in terms of volatility and safety of margin?
So, risk is an interesting thing, guys. I have a different perception of risk than most people. This is a great question. I'm glad we're talking about this. This is an iPhone 11, right? What's this thing worth?
$1,000?
I have no idea. I really don't know. Mo, you're the expert. What's this iPhone 11 worth?
Like a 1,000.
Okay.
1,100 or something.
$1,000. If I paid 100 for it, how risky is that?
Risky? Not risky at all, right?
Okay. What if I paid 10 grand for it? How risky is that?
Risky is just a bad move.
Well, but am I more likely? Risk to me is the chance of losing money.
That money back.
What's the chance of me losing money if I pay $100 for it?
Very little. Very low.
What's the chance of me losing money if I pay $10,000 for it?
Very high.
To me, risk isn't about the asset. It's not even about what's inside the asset. It's about the price paid relative to value versus value. That is risk. You will never hear this. People will talk about how risk is, leverage is risk. Yeah, leverage is riskier. I've said it earlier. I do agree with that. But if I pay a low enough price for that leverage, it doesn't make it bad anymore. It makes it good. And my price paid to value is higher. Other way around. My price paid to value is going to be lower. That is what risk is, guys. Risk should never, and the more and more you pay for something, anything, the higher risk it is. The S&P is way riskier at 3,900 than 1,900, correct? It's the same companies, they're gonna do the same thing. It's way riskier here than here. That's just a fact of life. Everything, your house that you live in, let's say it's worth $200,000. It's a terrible risk At $1 million, it's an amazing asset at 50,000. That's the question you have to ask yourself, is what's the price paid to value? That's what determines risk. That is it. And everybody, I've had billionaires literally tell me you're wrong on that when I say, prove me wrong. I'll get back. And I've literally had one say, I'll get back to you. And I emailed them, never heard from them again. Price paid to value is risk. That's it. That's it. That's it. That's it. You can have a lot of debt and still not be risky. You can have low debt and be very, very risky. If Tesla had zero debt, Tesla at 1,000 a share right now with zero debt is way riskier than P&G at 100 a share right now based on their value with the debt they have. This is way riskier. No debt, and like 100 billion. I don't know what the number is, but they have like 100 billion in debt. I'd rather have this, even though this has a ton of debt. It's not the debt that makes sense. It's the price you're paying to value. That is what matters.
Ryan's saying so every deal can be a good deal depending on price, right?
That's exactly it. I say this all the time. Every single asset is good or bad based on one thing and one thing only.
I don't always understand this, Paul, because I'll get into a real estate. I'll be looking at some real estate. And
I can prove it to you right now. And every single piece of real estate you look at, you'll say, would I pay $1 for it? Would I pay 10 million for it?
You're right, but
that's what it means.
It's hard to get in your mind because all I see is, well, look at the money we can make off of this, Paul. Or
Exactly. Would you rather pay $1 to make 10,000 or $1 million to make 10,000?
And when you break it down that easy,
that's it, guys. Investing is not very difficult. It's this part that's hard. It's the emotion part that's hard. Every asset is good or bad based on a good investment or bad investment based on one thing and one thing only: the price paid. It's the only thing that can change in the asset right here, right now.
And I'll bring it all the way back. This show really got off the ground, Don, when one time I asked you, not because I asked you, but one time I asked you, Paul, why don't we do a video, these trendy videos, Don, of like 5 tips on this or 10 tips to do this? And I said, what do you look at when you look at a stock, Paul? Because I didn't understand. All I looked at was price. This is the culmination of a show, is that the process of the 8 pillars that you've come up with gives you a valuation of a company.
It gives you the broad strokes that can help you determine a value. And value is not just looking at 8 pillars and saying done. And by the way, I do believe, and I know we back-tested it, if you just bought every stock that was an 8 pillar, you're going to beat the market. But you can probably do better by doing a little bit more isolation, a little bit more weeding out. But what I'm trying to fixate to everybody out there, I always tell the high school class I teach them, the one thing I tell them is, guys, if there's one thing you're going to learn from me, it's the iPhone analogy of $1 versus $10,000 for the iPhone. Because that'll teach you everything you need to know in life. If you can understand the concept that your $1,000 phone is a great deal, is a great investment at $1 and a terrible investment at $10,000, you will do so much better than everybody in the world in investing. Because this is how you should look at every single thing. When Seth talks about the pieces of real estate, he goes, what will it be? It'll be what it's going to be no matter what.
That's right.
The price, if anything, the more you pay for it, you probably won't be able to invest as much into it. The less you pay for anything, the better you will do.
So taking in don't erase it, Paul. I think the problem we're dealing with is if you don't know whether you're going to pay $1 or $10,000 for the phone, and you look online, all too often there's pages saying that you should be paying $10K for this.
Yep, and
right?
that's where you have to sit there and that's the hard part of investing. It's not this part, it's going, but everybody else is asking me for $10,000.
Everyone else is saying
it's worth $10,000. If that's the case, guys, great. I'm gonna sell my house for $100 million. You know what? I'm gonna give you a discount, $50 million. Great, it's half off. No, it's still only a price relative to the value. Just think about that analogy in your head. Your own home. If it was so easy that every single time you want to sell your house, if your house was worth $500,000, how easy would it be if you asked $5 million for a month, and then you go, you know what, just kidding, I'll offer you $2 million. I'm gonna ask $2 million for it. According to your theory, everybody should buy $2 million. But what they do is they go, wait a second, what's the market doing? Over time, it's only worth $500,000. Now you might sit there and say, well, Paul, if every phone's selling for $10,000, if every phone is literally selling for $10,000, and there's a reason fundamentally for it, supply and demand, that's a different story. Mm-hmm. But here you have to look at it and go, no, it's not about that. It's not about just discounting. That's why you have to look, when you look on eBay, you don't look at what's active only, you look at what's also sold. Seth, how many times you call me and say, Paul, this card of Magic the Gathering, at the end of the day though, it's still somebody's belief in the value.
Yeah. We talk about magic cards on this show, folks, because I have an extensive Magic the Gathering card collection, which I'm not proud of. But
Why wouldn't you be proud of it?
I recently did an inventory of what I have and what I think it might be worth if I'm selling out, and it was incredibly. It was over $200,000 in cards, Paul. And of course, I have moved a bunch of cards in last week. Actually, Paul, I was going to tell you.
So Kobe asked the question. I think he asked this in our high. He's one of our highest patrons. He's in our highest level, and I think in the Patreon he asked me once. He said, "What do you do? The market's overpriced." I'm like, "I do nothing. I wait. I'm okay waiting." To me, what's his name? Grant Cardone says 6% is better than 0%. Hopefully you will learn over time that this is not true. To me, sometimes 0% is better than 6%.
How so?
Because what if this was based on paying through the nose for it to get a 6% dividend yield? Mm-hmm. And all of a sudden the company can't afford it and you learned, crap, they have free cash flow of $500 million, they spend $700 million in dividends, they can't support that, but you bought it based on this. Or markets are overpriced, and recently they did 10% a year, but they're massively overpriced with a lot of risk of going down 20%. Would you rather make 0% or lose 20%? That's the way I view the markets. I'm not looking at it as, it's done 10% in the last 5 years, it's done 15% in the last 5 years, therefore it's better than 0. I look at it saying, well, based on this, how does the value look? I think there's a big chance of 20% losses for 2 or 3 years. I'd rather have 0. I have no problem sitting on my laurels and just waiting with my hands underneath my legs and just waiting. It allows me to build everything money. Imagine if the market had gone up, we probably wouldn't have created everything money.
Yeah, I mean,
this was based on me trying to teach people what I was believing because of the markets.
Yeah, I mean, there is a lot to say that none of us actually need this show we don't have to do the clickbaity, you have to click on this. We don't need this show. I mean, I guess the idea that you want to educate, we get that a lot, Paul. Why would someone with so much money be doing a YouTube show?
I love teaching. I'm waiting for the job to come through at Case Western Reserve University Law School. They're hiring me to teach law students for free. I teach at my old high school for free. I love teaching because I wish every single adult I talk to, when I talked about investing, what I always hear from them. The very first words are,
I wish I knew this.
I wish somebody had taught me this when I was younger.
Yep.
And we teach about, the joke is, at least you know what the powerhouse of the cell is, the mitochondria. No, we need to teach financial literacy. I can't stand it. And all you parents out there, go talk to your kids about money. Explain to them how you make money, how you save it, how you spend it. Talk to them about it.
Paul, I would say that my wife, Mo, this is interesting. My wife came to me last night and said, you guys should do a summer live stream program
for kids.
Well,
Mo wants us to get into high schools where we teach people to teach financial literacy.
Yeah, I want to do something that I started teaching at my high school 4 years ago, and now I'm trying to get into other high schools, just around the area, because I want to teach this stuff for free because it's the same thing. Nobody teaches this stuff.
So the question is, Paul, and I thought about this on the ride in, if everyone invested like you, don't we kind of need all these idiots doing idiotic
right. That's
moves?
The thing.
But Seth, remember, we're talking to a lot of people. There's a lot of people that are looking at our channel and like, these guys are idiots. I'm gone.
The vast majority, the fact that you guys are in this, this live stream right now separates you amongst everybody
You're never
else.
going to lose those kind of people.
Okay, we have a lot of comments, Paul. I'd like you to comment on. I didn't want to get into. I didn't want to totally go crypto, but some people say, for example, Paul, this was news to me. A Bearded Wonder is saying something to the effect of, I think you should reevaluate your stance on crypto because the U.S. government is targeting their own crypto system.
But all the more reason why Bitcoin you shouldn't look at. All it takes is a couple governments going, yeah, we'll give you crypto. So then I ask you, would you rather have crypto from the government, or would you rather have crypto from a bunch of teenagers who are buying crypto and telling me how blockchain's the next
So
thing?
here you go. The Department of Treasury is saying that they want to announce a regulation that require money service businesses, cryptocurrency exchanges, to be regulated, collected identity data,
second.
so they can track and
And the whole point of Bitcoin was to not be regulated. And now the government's coming out and I always said this, guys, at what point does the government just come in and we're going to regulate this? So the whole point of Bitcoin being its own future currency, and now the government wants to regulate it, and they're going to create their own Bitcoin, which is basically their own currency.
And if you think that can't happen, if you recall all you poker players in the early 2000s, I mean, people were making money hand over fist, basically illegally on online poker, and somebody snapped their finger and it all went away one day, Paul. I mean, I played too. We had friends that were basically making careers out of it, and then something happened, the government snapped, and that was it, right, Mo?
Yeah, and so now we have two things. So Not that Robinhood wasn't regulated because it had to be because
There
of
you
a trading
go.
platform, but that was supposed to be less regulated. That's more regulations coming there. Bitcoin, regulation coming there. Cannabis, regulation coming there. So anytime something blows up like this, the government has to have their hands in it. So don't buy this crap that there's never going to be regulation. If there's something that gets big enough, the government is coming in. They are going to put their hand in the cookie jar.
I am a strict libertarian. I'm as libertarian as they come. A year and a half, 2 years ago, somebody reached out to me, what do you think of Bitcoin? Maybe it was 3 years ago. I go, I don't like it. They're like, oh, I'm surprised. I'm like, why is that? They're like, you're libertarian. You're all about, because Bitcoin was all about getting the government out of things. And I remember thinking to myself, and I said to the person, the government will find its way into this. At some point, if it's that successful, the government will find its way into this. And sure enough, that article is proving it. Not only are they going to regulate the Bitcoin you already have and all the cryptocurrency you have, but they're also going to create their own. And I will say right now, I'd much rather own crypto from the US government than from a bunch of pimply, kids going through puberty in their basements trading crypto.
Dark Knight says institutional investors are investing in Bitcoin. It is set to skyrocket. That may
And
very
by the way,
well be
they
true.
are investing in Bitcoin for one reason. Career risk, because they're going to look at their clients are going to say, wait a second, my neighbor's an 18-year-old kid just made $10,000 off buying crypto. What are you doing? You're the professional. All right, we'll buy crypto. And guess what? When it falls, at least they can be like, hey, you wanted crypto. I gave you crypto. It fell. What do you want me to do about it?
This is why money managers can't beat the market.
Money managers cannot beat the market because of this.
They have to play that game where they all keep up with each other, no matter good or bad, got to do it.
A friend of mine once said to me and Mo and I, you guys should start a hedge fund. And we both were like, no chance. We have zero desire to have investors telling us how we should be investing or worrying about what an investor is going to say to us. We invest our own money. I have no problem being wrong for long periods of time.
Enrique is saying, look at Nigeria. They're trying to ban Bitcoin already. I don't know if that's true, but someone's saying that.
Interesting.
Someone else said, Paul, why not just...
Acne is no joke.
Someone back in the comments said, why not just leave a 15%? If you were looking for 15%, why not just leave a huge margin? Or maybe he was trying to say that you're just being too careful with all of this.
Guess what? I would rather be too careful because my history has shown that I do better. Apart from the last 3 years ago was the first time I went down to the S&P, down versus the S&P since 2003. I'd been beating the S&P all along. And guess what? As soon as the market goes down like I'm supposed to, I'll be back on top. Because being careful, there's a difference between being overly cautious so you don't make any moves because you don't understand anything. Like I have friends who are like that. They won't even put their money. I know a guy who's 40 years old who has $1 million, won't put his money in stocks. Why? Too risky. Well, no, he just doesn't understand. He's an idiot. Mm-hmm. So I look at that saying, that's different. I'm looking at saying, there's 10,000 stocks out there. I want to pick the 20 or 30 that are right for me. And I'm going to be 100% stocks. 100% stocks in the future. Trust me on this one. Up until 2016, I was 100% stocks. I want to be 100% stocks at all time. That means the values are so good that I'm going to do really well. Don't tell me that's cautious. No financial advisor in the world would advise for 100% stocks. I am. My cash will be 100% stocks.
Paul, talk about why you are looking forward to a bear market. Ryan's simply asking, do you do better? And
I do way better in bear markets. And because I'm going to buy, not only do I do better in bear markets, I then use those bear market purchases to crush when things start to rebound. Because everybody out there sells too late and buys back too late. I have no problem every good value investor will do better during bear markets than bull markets. Because we miss out on what sends bull markets up high, which is the hype stocks. But we do really well because we avoided those stocks as they crashed down. Mark my words, the NASDAQ 100 will go down way more than the S&P 500. Just like in 2000.
Mike asked a good question. Why not ever get into bonds or T-bills or other notes? It's not a matter of ever. There's always going to be a time. Just right now is not the time.
And Mike has a Tesla logo.
I like
all you have
Mike.
to do is pull up the curve, and I mean you're looking at a 30-year Treasury right now.
Guys, I own 90-day Treasuries. I have my entire cash in 90-day Treasuries.
Ibrahim saying,
right now on a 90-day Treasury you're getting 0.03%. So.
Ibrahim saying, I've always heard that you have to take risks to be rich.
Abraham, what's risk? Do you hear our thing?
Well, he might listen. It's hard to understand sometimes.
I know. That's what I'm saying. I'm talking to Abraham. Abraham, risks. What do you qualify as risk? Right there. To me, risk. I'm not talking about taking risks. When people hear that, they think literally, all right, put all your money on a crapshoot. Oh shoot, it didn't work. That's not a risk. I'd say take calculated risks. take calculated risks that if I said to you right now, Ibrahim, that you roll a dice, it has 6 sides to it. I will pay you $100 every time it hits 3. You pay me $10 every time it hits the other ones. You should take that bet all day long, right? Because the chance of you, 5 out of 6 chance of paying $10 and a 1 out of 6 chance of paying $100, getting paid $100. The net there is 50 divided by 6. What is that? Four. I don't know what this is, but it's $1. Whatever it is, the net is way higher. You're gonna do way better here. You're gonna make $16 here, and you're gonna lose, what is it? $8 here. You're still gonna have a net gain. That's a calculated risk. That is all we're trying to do here. I'm sitting here looking at history and seeing what does well over long periods of time, and without fail, fundamental investing always beats in the long run. Always beats the market in the long run. Always.
So I will saying you're right now saying the same thing Kathy Wood said about bonds.
What's that?
That's all he wrote.
No, I'm not. How am I saying that?
I don't know, maybe I'm wrong. Maybe it's going back to one of Mo's comments about bonds. Okay.
What? I didn't say anything about bonds.
Sorry,
I said they suck right now.
Yeah, that's true, Paul. In the end, what we're trying to do, folks, and what Paul has done for me in the past 2 years is go through this transition of giving you a process of thought about investing in these companies, and you don't have to worry about all this malarkey. You don't have to worry about the workhorses, the Nikolas, the Neos, the what ARK is doing, what's the next big thing that you're missing out on. Paul and I can rest easy knowing that our well-calculated investments will be doing well, and we might not make those huge gains, Paul.
No, I probably won't make the. I've always said to people, I'll never be the guy who buys a stock that goes up 20 times. Never gonna happen. It's just never ever gonna happen. But what's gonna happen is, this is my big pot of cash, and it's gonna keep growing. As I buy more investments that give me cash flow, it's gonna keep growing. Because at the end of the day, when bad times happen, people do well when they have a lot of cash.
Well, there's a great question here by Nara. Can you give us some guidance during this red market? Valued or undervalued stocks are dropping greatly. What to do? So maybe I can start answering this.
Go for it, Seth.
By going through this process where now my 10-year-old child can rattle off the pillars and know what they mean, the 8 pillars that we're describing, you should be just dying for it. Right, Mo? We should be dying for a low market. I mean, when the market's,
for sure.
We should just be ready to it's going to be like a spending spree, Paul.
When the markets fall big time, when I say big time, when the S&P is well below 3,000, to below 2,000, come to this channel. We're going to be very, very pleased, and we're going to help you understand how it'll be okay. Markets always rebound. But just like markets always rebound, they always have a fall, especially during massive overvaluation. We are more overpriced than the 2000 tech bubble. For those of you who didn't experience the 2000 tech bubble, go read about it. We are more overpriced today than we were back then. At least back then, small and mid-cap companies weren't overpriced. It was only big tech. Right now, almost everything's. It's very hard to find value across the board because low interest rates have driven people's desire for any investment.
Andrew said, this is great. If you want to take to the moon gains, you better be willing to take huge losses. I never thought about it quite like that, but.
Seth, I want to answer a question.
Go ahead.
From DL, can you guys talk about playing options during these down days? So just like Paul was saying, the market as a whole is entirely overpriced. So even that 8-pillar watch list that we sent, we are looking for puts on those right now, and we cannot find them because the values are so far away that we can't collect premium on them. So we're not really doing much with the options right now. But I don't know. Stay tuned. Hopefully we get some kind of pullback.
You know,
in the next couple of days.
Thanks, Mo. I do see some of that. I would say there hasn't been a lot of love on the show today, Paul. We haven't had a full hour-long bitch session in a while, and yeah, I guess.
You know, I don't want it to sound like we're being negative or being. It's just we're just trying to keep it real about it. Like, you know, I look at Jim Cramer and all that, and I just look at going, listen, I'm going to be me, and being me involves if somebody tries to tell me that. I'm bad about this. If somebody tries to tell me 1 + 1 = 3, I'm sorry, I'm not gonna let that slide because you have people listening to you. And I just know, I'm like, no, it does not equal 3, it equals 2, and here's why. I'm not gonna be the guy, I hate to say it, I'm not gonna be the guy who's gonna say, let that person be dumb. When they're in the public eye. If they're not in the public eye, if it's just some hobo on the street that says 1 + 1 = 3, okay, let them be, whatever, I don't care. But I cannot, this is why I don't go to cigar shops. Because everybody in the cigar shop is a genius. And it drives me nuts. 1 + 1 = 2. I don't care what happens. If you tell me it's 3, you are going to get called out. Absolutely every single time. With a vengeance, because I look at it saying, people look at you and say, because of your position in life, when we have 1 million subscribers, people are going to be saying and I'm going to sit there and say, no, and Seth, you verify this.
You correct me every time I say, you were right about this,
and
Paul.
I say, no, I wasn't yet. I always correct and say, guys, it's about the long game. I've had people write to me and say, Paul, I bought H&R Block because you said it, you were right. I'm not right yet, guys. I'm not right because of 1 or 2 months. Gauge me on my 10 years. That's when I'll sit there and say I'm right. 10 years later, look at me. My things that I said, for the most part, came true. Are Meet Kevin or Stockmo saying that? No. You can easily give me accolades. I'm not right because of 1 or 2 months or 1 or 2 weeks or 1 or 2 years. I'm right because of 10, 20, 30, 10 to 30 years. Gauge me on that. Because at the end of the day, I will go against any financial planner you have over a 30-year period. Anyone, bring them up here. In fact, on LinkedIn, I've offered several times, all the financial planners say I'm wrong, I've offered several times a $50,000 bet over 10 years on who does better in investing. Guess how many have taken me up on it? Anybody want to guess?
0.
0 have taken me up on it. 50 grand over 10 years. That's $5,000 a year. That's $400 a month. And nobody takes me up on it. Why? Because they know they will lose. I had somebody once say to me, I'll take the S&P 500. Great, you take the S&P 500, I will beat it. I even said that. I'm like, I'll beat the S&P 500. You take it. They didn't come through.
Yeah, people are saying what got into us today. I think that's just it, Paul, is like, when everyone's high flying and the market's up and all the stocks are up, these idiots on YouTube are going to do these 10x, 20x, 100x videos. They're promising these amazing gains. And we just sat here and let it happen, of course, and sure enough, when it drops, we talked before, is like, I didn't see the Stockmo workhorse, I blew it video today. He just transitioned into his most favorite penny stocks. And so we will certainly...
Because he has to make money somehow.
That's right. He's in his basement trying to make money. And all of us have other companies, and we do this out of, just, I don't know, Paul, because we love it. You know what I mean?
It is we love
Mo,
it.
what do you think?
And the thing is when in 2 or 3 years from now, when we're doing this, we are going to sound exactly the same.
That's it.
Yeah.
Nothing is going to change.
This is what I'm talking about.
We are going to be a little bit more excited because we're going to be invested in this and
but
that.
Our fundamentals will not change.
Everything is going to stay the same. This is going to be the same show.
I have a treat for you.
Absolutely. It can't be the same show.
Yep, I have a treat for you patrons. I just loaded up 3 videos from 2018, and I'm going to release some Patreon exclusive videos because I was baffled, Paul. The first videos we ever recorded of you and your philosophy sound eerily. There was no COVID. There was no. They sound eerily like the sentences you're saying today.
Well, it won't change because fundamentally.
That's true.
Fundamentals. What I perceive is we have stock market data going back to 1871, and every single time there's a major rush, it's always technology. But back in the day, it first started with cars, then airplanes. First locomotion, then cars, then airplanes, then all these things. And everybody's like, well, no, it's different this time. Guys, it was different for them back there because cars changed the world. One of the biggest things that changed the world is, here are the 3 biggest things that changed the world. Cars, airplanes, internet, computers, and internet. And I'll tell you right now, go look at the 4 sectors that have the biggest number of bankruptcies and things going to 0. Cars, airplanes, computers, and internet. Because everybody thinks, okay, this is change. Those are the 4 things that have literally changed the world in the last 150 years. And every single one of them saw massive, massive bankruptcies and companies going to 0.
Let's slow this down for a minute because there's some great comments coming in. And we want to get back to the idea that Paul's new girlfriend did jump into chat. And the question is, does he actually enjoy being tickled? Make sure you guys...
That was a great question. I laughed pretty hard.
Make sure you guys tickle that thumbs up. I guess I don't know if I want to say I'm sorry for letting out our frustrations, but we do, Paul, we do have to look wrong for a long time, and we have to take these comments of how stupid you are and how disciplined you are that no one would ever buy anything. And so when something like Lucid or Workhorse happens, we literally rewatch our own videos, Paul, to make sure. Am I wrong? Like I literally went back and watched our own videos to say, like, we said this, right? Like we said this could happen.
And guess what? What could happen is Tesla could go to 8,000 a share.
Yep.
What could happen is CCIV could go to, but it's not going to happen because of fundamentals. It's not going to happen for the right reason. It's going to happen because of hype and momentum. There's a big difference. A stop clock is right twice a day. Even a blind squirrel finds a nut.
Yeah.
The sun shines on dog crap too. Guys, don't confuse the end result with the right process. I could have, if I had 10,000 4-year-olds throw a golf ball at a basketball hoop, there's gonna be a few that get it in. Are you gonna go give them an NBA contract and say, oh, you got a really hard shot? No, you still can't give them an NBA contract. Now, if you show me a Steph Curry who makes it, if Steph Curry and me shot a 3, there will be times I make it and he doesn't. There will be times. It'll be very rare. Does that mean that if I happen to catch the one time that I hit it and he didn't, you fire him and you give me the contract for $30 million a year? That's stupid. Steph Curry shows that he can hit 117 in a row and I can hit maybe out of 117, 25 of them. So I look at that saying that's no different with investing.
Reed is right. The more thumbs up we get, the quicker two of you may be driving a Tesla Model 3 this next coming year. We will be giving away a Tesla when we hit 50,000 subscribers and 100,000. Our goal, Paul, it's funny, is our goal is like, why? Beth was like, wait, why are we doing this again? It's like, well, the point is we want to get our channel up there and use some things that a lot of other channels may not have as an excess of money to sort of grow our channel. Sort of the thing missing, because we are not going to, this idea of discipline will not resonate with the same people who are following these 10x channels. And Paul, I have to applaud you, and I think our patrons would agree. The fact that you've stayed so consistent with your mindset, you have not wavered. I have asked you to waver. I have said to you, look at what happens if we do these 10x videos. You'll get hundreds of thousands of subscribers in months. And you're just like, no, we're going to stay the strong and steady course.
Seth and I have literally gotten into arguments about this.
Drop down, yeah.
Like literally Seth getting mad at me and I'm getting mad at Seth. He's like, we have to do this. I'm like, no, it's not. And I've even said to him, if you don't like it, Seth, then don't host anymore. I won't be offended. Because I look at it saying, I cannot not be me. Right? It's like I'm fundamentals. And by the way, the great way you guys vote is by unsubscribing or subscribing, liking it, and joining our Patreon. If you like what I say, great. If you don't like what I say, fine. I'm just trying to look for people. I'm not trying to appeal to everybody. I'm trying to appeal to people who want to learn the way that sounds right to them. And if what I'm saying sounds right to you, great. If it doesn't, no offense taken. But don't think that hype is the right method when it comes to fun. It's not the right method. Can you make money in momentum? Yes. I'm going to make money in momentum. But it's not, when people mix, Cathie Wood is mixing hype with fundamentals. It does not work, in my opinion. Could that be wrong? There are a lot of day traders who use fundamentals to make money. I still don't understand how that works, but they do that. Okay, more power to them. And they've done very well. New Market Wizards is the book. Go read it. And there's a lot of guys who talk about fundamentals when it comes to trading. But they're trying to make guesses. So what's up, Don?
As we get ready to close...
go ahead, Don.
As we get ready to close, a patron of ours, and I know him very well. His name is Hector. He's asked me several times for MRC Global. So since we've gone through the
You're right, Don.
phase, let's close with a stop.
I'll tell you what. You're absolutely right, Don. Because I was going to lead into this. I was going to lead into this, Don. In that, in the end, folks, I don't know you out there, especially you patrons. I don't know if we can express our thankfulness that you've joined our community.
1,000%.
And how much of the brain power that Paul, all of our team here, constantly on a day-to-day basis, we have fights on text as to how much content we should or should not be bringing you. I pose up all these wild ideas of all these videos, and the only thing slowing us down is the manpower and willingness to record all of it. Interviews, there's an interview coming out with a patron this week. A story,
is that coming out?
It's coming out. A story, I interviewed a patron about his full story from investing to now. It's going to be incredible.
Pretty incredible story.
I want to highlight you patrons. You guys take up so much of our thought process almost all day. It's hard to even get any work done. All we're doing is trying to please the 1,000 of you, and I assure you we're going to keep working hard for you moving forward. Don, what is that ticker symbol that we're going to do right now, baby cakes?
MRC.
MRC. Paul, let's pull up MRC in the beautiful Everything Money software that our patrons are getting. I love this. You should be very proud of this. Of course you are. And let's look at this company, MRC Global. What do they do, Don? Do you know?
I surprisingly do not. I haven't really done a deep dive into these guys just yet. So
thanks, Don. We'll do it.
Okay, so they're $770 million market cap, $2.5 billion in revenue, negative profit, so no PE, X, and no profit margin, X. The problem we have here, their gross margin is very low, and gross margin is the profit they make on every extra dollar sold. So,
Paul, MRC Global is the leading global distributor of pipe, valve, and PVC fittings, products and services
okay.
to the energy industrial markets.
Okay. So free cash flow in the last 12 months was $270 million versus a loss of $274 million reported on the book. So there might be some cash flow issues here in terms of cash flow might represent a better story than the earnings. So far, 2 X's, not a great start, but let's go move on to the income statement.
This is a 100-year-old company out of Houston, and we're looking at MRC Global. We're going to look at their revenue growth, pillar number 3, baby.
$3 billion to $2.6 billion. If you look 10 years ago, they're at 4.8. So definitely X's across the board there. So far, 3 X's.
Okay, pillar number 4 is profit growth over the past 5 years, profit growth.
Loss of 83 to a loss of 274. Another X. Not a good start here, guys.
Not a good start.
And their profit's not doing well. Number of shares outstanding. Oh, we finally have a check mark. It is, the number of shares are down about 20%. So check mark there.
Normally, I would be sad at 4 straight X's, but I have a question for you, Paul, because I've asked this before. Is there a fine line when a company's starting to tank and look terrible? Is this a time that we obviously buy?
That's when it's going to take more understanding of what the company's plans are. You have to do a lot more research. It's not going to, somebody who bought Apple in 2001 might be like, oh, they're a genius. But if they just did it by chance, who would have thought that Apple was going to become what it did?
I did that for Netflix and Tesla, and I took it on a chance. I bought it on a chance.
I mean, it could work out sometimes, but if you do that all the time, it's probably not going to work out unless you have the right process to understand why that happens.
Okay, was this pillar number 5 shares outstanding, Paul? Did I miss it? Or
Check.
Check
Yep.
for shares.
Down about 20%.
Pillar number 6 is current assets over current liabilities. Pillar number
About
6.
$1 billion in cash versus 417 in current liabilities, and $1.1 billion in total liabilities. So they have a very good cash to liabilities ratio.
Very
so that's
nice.
good. Check mark there.
Pillar number 7 is free cash flow growth over the past 5 years.
So 5 years ago, they did $400 million in free cash flow. Last year, 272. That's an X.
The free cash flow is down.
Yeah. So and the average is 400 minus 46 minus 179 plus 252 plus 272 divided by 5.
Divided by 5, the average is 140, Paul. 140 million in free cash flow per year.
So there's a check mark there because they're selling for 775. So it's about 5 times free cash flow.
Oh, wow. 5x free cash.
Now, here's the deal. I mean, I don't know about this one because look at their free cash flow. It's all over the board. Lost 23, made 29, made 395, lost 3.6, made 410, made 400, lost 46, lost 179, made 252, made 272.
Let's not skip out on pillar number 8, Paul. Can we go back? 140 million in free cash flow is the average.
And they're currently $770 million company. So their current free cash flow is about 5.5.
So this is very low in comparison to our usual number of 20, which means it's more affordable, undervalued, underpriced.
So if you believe that they're going to have an average free cash flow for the rest of the time at $140 million a year, buy it all day long.
Because I think, I've had this issue when I was first very confused about the pillars and what we're coming up with is I say, we want to buy the companies low. If you look at the stock ticker and the price for this puppy, it's very low in comparison to what it used to be. So I guess, is it healthy enough with all these? This is the fine line, right, Paul? I mean, is it healthy enough to buy, or is it still going to go low? That's the end all be all question, right? Of course.
But here's the point. If you told me right now, Paul, there's a business you can buy for $770 million, and every year it's going to give you $140 million for the rest of the time, would I buy it?
Absolutely.
Absolutely. In 5.5 years, I have my money back.
Mm-hmm.
And I'm going to make tons of money off it. I'm going to be making 20% returns the rest of my life. That's the question you have to ask. Now, you might sit there and say, well, Paul, as a company, as an investor in a stock, I don't get those money out. Well, yeah, you kind of do. They can pay it to you in dividends, or the company's bank account just gets bigger and bigger and bigger and bigger and bigger, and they'll do either a big dividend or somebody will come buy them out and say, well, I can buy the company for $700 million, and the bank account has $1.4 billion in it. I'm cool with that. I'll take it. That's the point of investing in stocks. And they buy shares back, and all of a sudden, they buy so many shares back that the earnings per share has skyrocketed itself. And we're going to do more about this, because it's a hard concept to understand when people hear a stock. They only think, the only way to make money in a stock is a stock price going higher, or dividends. Correct, but what's behind the company is what determines the stock price.
Dads with Purpose asks, does the free cash flow ratio need to be a certain amount for investors to feel good, or is that industrial specific?
It's very specific. It's specific based on growth rates too. So if free cash flow can grow a ton, you should pay a higher multiple. If free cash flow is decreasing, pay a lower multiple. Some industries have a higher multiple because they might have a higher margin. or things like that affect it. That's the art of investing. It's not some set, tried and true. Now, do I like single-digit free cash flow? Of course I do. I love it. But usually in those situations, there are free cash flow levels like this one where it's all up and down. You have to sit there and determine what the right number is. I tend to avoid energy because of the large fluctuations in price.
Let's head over to Dr. Momentum, looking at MCR group, the pipe fitting group, the valve group. Go ahead, Paul. Go ahead, Mo. Sorry.
So again, this is another one of these 50% stocks, and we're seeing a lot of these in this market. So we had some resistance back here in June, a tiny bit here, and we are back at it again right now. So it is going to be very hard for this company to break through its resistance line. Now, let's see what they're doing right now, though. So we had a great engulfing candlestick yesterday. We are coming right through the sweet spot very nicely. If you want to add to this, I think you should add on top of the previous high from whatever date this is, the February 5th. So I think you should be adding over $9.95, so say $10 or higher. That's when you're going to get the highest probability of that stock continuing to go up on you. So hopefully you get a couple green candlesticks like this and break out and you Gucci.
If trading resonates with you, you can join the middle tier of our Patreon. Unfortunately, at the moment, it hasn't been resonating with Mimo, but we're going to do a little video series on showing an idiot like myself what exactly he's talking about with candlesticks, and it sounds warm and glowing. Yeah. Okay. I do love you out there. Paul and I love you. Don, behind the scenes, works tirelessly for this channel, getting these YouTube shows prepped up. And the next Fireside Chat exclusive Patreon-only video where Paul and I will be cursing even harder will be next Friday night from Paul's mansion. Friday night, probably around 6 o'clock p.m. Paul, I know that's a little early for us, but I heard the sweet spot's very nice for our overseas
6 o'clock?
fellows. 6 p.m.
I put it in my calendar for 6:30, but it'll be 6 o'clock.
It will be, thank you. Did we start 6 o'clock? Great, guys. Yeah, that'll be the Fireside Chat next
We'll get some sushi,
Friday.
some
Yep,
pizza,
that'd be great.
some chicken tenders.
Beautiful. Next Friday.
Some pop, some yogurt.
It will be a candlelit dinner, and that
Coke
weird,
Zero.
if you've seen it before, that weird lamp at Paul's house will be there. In turn.
The anal beads lamp that I'm taking in the new house.
That's right. The Tesla,
You're taking that?
the Tesla promo.
Yeah, I told you that.
I told you no.
You're talking about that creepy lamp.
You told me no?
Yeah.
Oh, I'm taking the bedroom. I'm taking the bedroom lamp.
I'm trying to close
That's
the
what it
show,
was.
you two. Okay, I love you. I love you. I love you. I love these two. We're shooting a very fun Tesla promo tomorrow. Fireside Chat next Friday. Live streams Tuesdays and Thursdays at 1 p.m. Eastern. 20 videos a week and highlights on Paul's girlfriend. It's been an incredible day. We're sorry we lit into everybody.
No, we're not sorry about that.
You're right. Someone email.
Somebody needs to say it.
Someone email us the Stock Mo and his channel, and he let him come on here and argue why
No, I'm
he's
not gonna
right
have Stock Mo on
and
the
Paul
channel.
and Paul is wrong. We'd love to do that. Smash tickle that like. I love you. I love you, Don, and you too, Mo and Paul. I love you guys too. And thanks for
Bye, guys.
watching. We see you guys.
Pickle my
Love you.
pickles, Seth.
See you guys. Love you. Hell yes.